Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, October the 10th, the year 2018. Let's talk trading. Filter this. I was scanning a few other forums this morning, um, and I noticed traders keep wanting to filter out the quote unquote bad trades. The bad trades, I guess, are the ones where they lost money. But, that paradigm, that way of looking at things just leads you down the wrong path. It leads you down the path of basically destruction, because this whole idea of filtering is kind of ridiculous in a way. I mean, when you put a trade on, you don't know if it's going to be profitable ahead of time. Because if you knew, then there wouldn't be a market, because you'd only trade the ones that were profitable, and you sooner or later just own everything. But that's not the way it works. So I guess, to the point is, don't try to filter out the trades. And as I go through the charts today, um, I think maybe you may be able to understand why I say this. So let's just get right to it. But the one thing you can do is you can definitely employ your money and risk management on every trade. Don't ever filter that out. Okay, so here we go. We're looking at the monthly euro yen. Now, when it was up here in the upper wick zone from the previous month, there was a trade right there to go short, and then there was a trade opportunity to go long. Now, if you try to get funny and filter it out saying, well, we've got this uptrend here, blah, 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 so we should only, let's filter out the short trades. Well, you would have missed out on a trade. On the other hand, if you were a green rat and only go long, that's a totally different story. But to sit here and try and predict and pontificate, no, just don't even do it, because looking at some kind of squiggly line here, or some lower indicator that's just filled with squiggly lines, or icons, or whatever, it's just ridiculous. No, the trade is simple. You got a horizontal line here, and there's a horizontal line there. If it goes above it, this one, if it goes right there, you go long. If it hits that one, it goes short. No filtering. There's no need to filter, because the odds are in your favor. You put your stop loss where it belongs. You adjust your position size accordingly. Then there's no need to filter. You don't need to. If it goes against you, it goes against you. If it goes your way, it goes your way. You can't filter. You don't know ahead of time. Just stop the madness, I like to say. And here we go again. Like the gaps. You try and filter out a gap. Oh, well, it could go against me. Yeah, well, any trade could go against you. Just take the trade, have your position size and stop loss in place and see what happens. I mean, it can't be simpler. Once again, we entered the lower wick zone here. There was a short trigger. Well, you could have 1,000,001 reasons why price should go up here. But the thing is, we're at the line. We're going south. I mean, we had an opportunity right here, from here to here, to bank what, 125 pips or more on that one simple trade. And now let's look at the daily. Okay, here we go. There was a trigger here, long, going with the daily green candle color here. That's a difference of 26 pips right here. That was worth 26 pips. He took that trade. Now we just exited that upper wick zone. You're 5 pips to the good. And let's see, on the range, 1, 2, 3, 4, 5. And the new beast is definitely still leading the way on the range. High range is high minus low for those of you just tuning in. Can't assume. So once again, you say, well, I'm only going to do this and filter this trade for because of blah, blah, blah. Well, you see here, you got all this, so I'm only going to go shorter. But then you would have missed out on a nice pop. Buy zone is probably the most perfect example of people talking about filtering trades and getting whipped around in the buy zone. It's real simple. We got the 1 hour chart, okay? Now, if you remember, I guess it was a while ago, let me find it here. Open minus low, high minus close. I thought, maybe I never did put that up. I thought we had a range frequency distribution. I guess I'll have to remember to load that one up. Whoops. Oh, just so you know, I don't look at the market. I open the computer and you get the stuff live as I'm seeing it. So I don't have a prearranged script usually, not on the Let's Talk trading charts. So anyway, the point being is you've got 20 pips between here and here. So if you trigger here and you put your stop loss right here, that's 20 pips. There's not many bars over 20 pips. So people talk about, why you get whipsawed, blah, blah, blah. Well, do you see any whipsaw? Do you see price going all the way here and here? I don't. And when you do, you can usually either scratch the trade or take profit if it's whipping. But I rarely see it go here and then go here and then go here and go here, or even if it does this, if it comes here and then goes down here, comes here, and then maybe goes partially away. I just don't see price doing that. That's not the way price usually reacts. I mean, you're looking at the chart here and a trigger right from the open entry, boom. Here, once again, you're in the buy zone, red candle. So if you're new to this, you wouldn't trade it, but as you see it exiting the buy zone, maybe you did go long and you could have profited. Now, there's reasons not to, but you see the pivot point was right near the open, so pretty much that trade was off. And as you can see, price is right around the VWAP. As I explained the other day, I think maybe it was yesterday, that sometimes people want to trade back towards the VWAP from extremes. And the VWAP is the volume weighted average price, just in case you don't know. Okay, and you can see the rats, green rats, that wasn't a trade right here. This was probably, there's a nice red rat trade. You see a rat reversal, green candle closes, red candle closes. You go short at the low. That's also a turn trade right there. So you see here in the money. Now you see, one of the things is for beginners, you want all 3 colors to be the same, just to be totally safe. But if you're in the moment and you're taking the trade, once again, you can put your stop loss. You don't have to worry about filtering out the trade. You really don't. The thing about it is if you're going against that daily bias, you might be a little bit quicker to take profit. So you see right here, it went from the red rat zone to the green rat zone. When it came out, there was your profit. And so you're looking at what? If you were late getting on the boat right there at the last time, you're looking at 30 plus pips in profit. Not bad for less than an hour. See, 15 minute, 1, 2, yeah, little Less than 45 minutes there. Nice, nice trade. Somehow the video got cut off. Um, and I don't know where it got cut off. So I was rambling here. So I'm not sure where we got cut off. So let's just go through quickly. We've got the buy zone. And we're talking about filtering trades. There's no filter here. Don't filter the trade. You go long here. You go short there. If you get stopped, you get stopped. It's that simple. People talk about whipsaw. I don't see any whipsaw. We can just check this out every day. We'll see how many times price gets whipped. It doesn't usually. And the rats, there was a nice red rat reversal here. Green candle closes, red candle closes. You go short right there, or you consider it as a turn trade. You just jump in, and there was about a 30-some pip difference here. Nice trade in less than an hour. Where do you take profit? Hey, if you're trading out of a red rat zone, you get in the green rat zone, you take your profit right when price decides to leave. Once again, we saw the pivot. The pivot was just right there at the open. Not much doing. There's our monthly pivot here. Here's our weekly pivot right there. We haven't hit it yet, so that might come up on the missed pivot chart. You can see we've missed a daily pivot yesterday, but we closed that pivot today. See, right there, price took it out. So we're back down to just 3 missed pivots for the year. Price action, price action, price action. One ball at the top, red at the line. One ball at the bottom, green at the line. 3 ball at the top, red at the line. One ball at the bottom, looking for green at the line. Speaking of the lines, once again, candle color at the line. Take the trade. Set your stop loss accordingly. And you can see here, we're playing with the 00 number. So we'll see which way price gets pushed. Wick zone, price doesn't like staying in the wick zone, as you can see, in and out and in and out. Holo zone, nice trade right here. You can see that again. Not to be confused with the rat zone. Inventory reduction bars, we had some long triggers, and let's see, our short triggers are down here. We haven't hit any short triggers yet. One of my favorites, the previous daily, weekly, monthly. Once again, trading at the line right here, that price action. Yesterday's high, leaving that wick zone. You can see we've got some movement here. We've got the ask drop below the peak of the bid. You can see there was a nice drop there. Bid came above that. So if you popped out, there was more, but you don't know that, so you take what you can. Let's see. I think I left that on, but once again, you can see here, Einstein line, simple horizontal line, no filtering, just taking the trades. Sometimes there's a little, sometimes there's a lot. So that's it, fellow traders. Just remember, don't try to put filters on your trade. Don't be adding a bunch of indicators, especially squiggling lines, trying to filter out trades. Just take the trade as it appears, set your stop, because you never know. Because just remember, it's not what you trade, it's how you trade it. So let the draining of the banks continue.